Shopify stock just hit an all-time high of $182. It's up over 100% in the last year. But here's the million-dollar question. Can it keep going? Or are we staring at a bubble that's about to burst? Because at 167 times earnings, buyers are paying $167 for every $1 that Shopify earns. That is wild. And it means that Wall Street's betting big on one thing: continued growth. Shopify's revenue just jumped 32% year over year to $2.84 billion, but net income dropped 68%. So the company is growing like crazy, but profits are sliding fast. And that creates a tug of war between momentum and margin, and only one side can win. And then there's something that I think most people are missing. Shopify's current ratio is almost 4. It means the company has almost $4 in assets for every $1 in liabilities. It's kind of like having $1 million home with a $250,000 mortgage and no other debt. That's insanely liquid, right? Maybe even too liquid. We'll see. Hey, what's up? My name is Rick Orford. I've been trading since 1999, and I am not a financial advisor. That's a good thing. I break down the numbers so retail investors like us can make smarter, more confident decisions with our money. And that's why today I'm going to be diving into Shopify, the engine of e-commerce, its momentum, and whether this $225 billion giant still has room to run. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/RickO to get your 10 stock picks right now. Shopify isn't just another e-commerce platform. It's the engine powering millions of online businesses worldwide. And the company's mission, it's clear: to make commerce better for everyone. Whether you're a small creator or a global brand, Shopify gives you all of the tools you need to launch, grow, and manage your business all in one place. From online stores and retail shops to social media and marketplaces, they make it easy for businesses to reach their customers wherever they are. Now, behind the scenes, Shopify's technology takes care of the heavy lifting like inventory, payments, marketing, and customer data. This way, businesses can stay focused on growth and creativity. Now, Shopify is built on simplicity, reliability, and innovation. And they're not just adapting to the digital economy, they're helping shape its future. In other words, they don't just follow e-commerce trends, they're creating them. Shopify's built a thriving ecosystem around the platform, one that includes app developers, theme designers, marketers, service professionals, and even affiliates who extend what the Shopify experience can do. Their business model is built around 2 main revenue streams: subscription solutions and merchant solutions. Under subscription solutions, Shopify earns revenue from monthly and annual plans, platform fees, and services such as point-of-sale pro apps, domain registrations, and store themes. On the other side, merchant solutions are designed to simplify operations and improve profitability. These include Shopify Payments, and that's for processing transactions, Shopify Capital for lending and working capital, and tools for shipping and fulfillment. Now, Shopify stock recently closed at $160.94 with a market cap around $225 billion. Price-wise, Shopify does look a bit pricey, trading at around 167 times last year's earnings. Simply put, buyers today are paying $167 for every dollar that Shopify earned last year. It's not cheap, it's a lot, and it's a bet on future dominance. Volatility-wise, it has a 60-month beta of 2.73, roughly 3 times that of the broader market. It means that the stock tends to move nearly 3 times more than the broad market during price swings, and that amplifies both the gains and the losses. For investors, this level of volatility suggests higher risk, but also the potential for outsized returns during bullish conditions. So yeah, Shopify isn't for the faint of heart. When it moves fast. The stock recently recorded an all-time high of $182.19 on October 29th. Year to date, the stock is up 51%, and over the last year, it's up about 105%. That's the kind of rally that gets investors asking, is this momentum or mania? And with Shopify's stock reaching all-time highs, investor might wonder what's actually under Shopify's hood. It's actually something that's come up in my Discord recently. So let's have a look at the numbers, because every chart has a story, and this one, it might surprise you. Shopify just recently released its third quarter financials for fiscal 2025. Revenue increased 32% to around $2.84 billion year over year, and that's impressive. It's an impressive top-line growth for a company of this size. Clearly, demand is still there. Net income came in around 20 cents a share. But year over year, it was down 68% from $828 million. So yeah, they're growing fast, but they're also spending a ton to stay ahead. And that's the trade-off for dominance. Shopify also has a current ratio of almost 4. It means the company has about $4 for every $1 in current liabilities. They're sitting on a solid liquidity cushion and can easily cover their short-term obligations. Now, anything above 1 tells me that a company is on a healthy footing. Over 2, it can hint at idle assets, right? It's money that is underused. At 3.93, Shopify appears well-positioned, but might be hoarding a little bit too much cash, or instead of putting that capital to work for growth. So yeah, they're playing it safe, maybe a little bit too safe, because idle cash earns nothing in a growth market. Now, for the fourth quarter of 2025, management expects revenue to grow in the mid to high 20% range year over year, and that'll reflect continued strength across all of its core business segments. Gross profit is also projected to rise in the low to mid 20% range, driven by favorable product mix and disciplined cost control. Operating expenses are also expected to remain steady, which could come in between 30 and 31% of total revenue. So yeah, Shopify's still growing, but it's doing so responsibly. That's how you build business that lasts. So that's it for Shopify's financials. But I bet you want to know, is now the time to be buying Shopify following the release of its latest financials? Well, let's have a look at what Wall Street actually thinks about Shopify. A consensus among 47 analysts rate the stock a moderate buy, and there's a high target price of $200. Now, the average score has gone up to 4.11 in the last couple of months. That's some steady confidence, not some overhyped momentum. Wall Street likes Shopify, but they're watching the margins closely. Shopify's third quarter results proved they can deliver. Revenue climbed, but net income dropped sharply compared to the prior year. Still, the company does remain in a strong financial position with plenty of liquidity to cover any short-term obligations. And this kind of balance sheet strength gives Shopify the flexibility to invest in future growth while maintaining financial stability. They've got the cash, they've got the confidence, all of this to keep scaling without breaking a sweat. But what do you think? Are you buying Shopify? Let me know in the comments below. And while you're there, if you found this video helpful, why not like and subscribe? Because it'll help others find the video, it'll support the channel, and you won't miss out on any of my future deep dives. Well, folks, that's it for me today in this video. I want to thank you so much for watching, and I'll see you next time.